Happy 2025, folks. It's a new year, but will it be a happy year for home buyers? Today we're going to explore what's going on in the market, what we can anticipate based on what experts are telling us at least, and what you should look for to get ready to get into the market. I'll give you a couple of hints. If you see these things happening, it may be time to make your move. Hi again, folks. Tom Mason with West USA Realty based out of Arrowhead in Peoria, Arizona. So what do we think we know about what's coming up in the 2025 market? We know that 2024 is horrible.
It has turned out to be an annus horribilis.
But don't take my word for it. Take a look at this chart. You can actually see existing home sales way down in 2024, and this is one of the reasons why. Interest rates were high, but home prices were high as well. And in the Phoenix market, prices continued to go up. Wages didn't catch up, and inflation took more of a bite out of everybody's pocketbook. So what do we anticipate for 2025? Well, the government doesn't think it's going to get that much better. Fannie Mae is looking at the housing market. Although wages might be catching up a little bit more, it might become more comfortable. The key things we have to look for are inflation and how much money we're spending at the federal level. What we spend at the federal level really impacts the 10-year Treasury. If you looked at some of my old videos, you know that the tie-in between 10-year Treasury and mortgage interest rates. If inflation drops down to the 2% target for the Fed and we stop spending as much money as we have been, we may see interest rates begin to decline. But they aren't there yet. So just as an aside, who is Fannie Mae and who's Freddie Mac? Fannie Mae buys mortgages from bigger banks and institutions, and that allows bigger banks and institutions to offload those mortgages to the government. It's sort of a government adjacent agency. And those banks then have liquidity to lend to other people. Freddie Mac actually looks at smaller community banks, and they buy mortgages from the smaller community banks. So they're very important in what happens in the mortgage industry. And they don't see it thawing out anytime soon because interest rates are probably going to stay above 6%, probably 6.5% or higher is what they're anticipating. And people are locked into those lower rate mortgages already. So if they're going to sell their home to move to a bigger home, they're going to have to take on a bigger mortgage than they have now. If you were lucky enough to get in at 3%, add 40% to your mortgage by getting the same size loan with this 7% interest rate now. So that's the lock-in effect. People are locked into their mortgages right now. They don't want to move. Affordability is also still an issue. You guys know the deal. You know what's happening out there. You can see it. You're suffering under this economy as well, looking for that right time to get in. Now, you may be looking to time the market, and these are the two hints that I wanted to give you about looking at the market and what's going on in the marketplace. If we see inflation, the rate of increase of inflation to continue to decline and hit the 2% mark by the Federal Reserve, their mark, then we can see the bank lending rate go down, which doesn't really impact mortgages all that directly. But what it does do is it tells the secondary mortgage market that they don't have to add as much to the 10-year Treasury to make money in the marketplace. Second thing is if we stop spending so much money at the federal level, then we have an opportunity for the 10-year Treasury to come down. And again, basis for mortgages, the 10-year Treasury and the secondary mortgage market, two key indicators. So look for inflation to drop at that 2% rate and see what happens with our budget. I was in the military for 25 years, and when people compare Congress to spending like drunken sailors, they're insulting drunken sailors. Another thing to consider is whether prices of homes will go down. Well, in Phoenix, we have people moving here every year. 80 to 100,000 people move into the Maricopa County area, whether it's for work, retirement, whatever. We have a lot of business, a lot of technology being built out here in the valley. And so it's important to take a look at the market and see what's going on right now. So on the screen, I have the December 2024 market. You can see our active listings are almost 20,000, and the sold listings were only 5,200, almost 5,300. There are a lot of properties on the market, but not a lot being sold. And that follows national trends as well. This is existing home sales. You can see if I went back 5 years, you can see even in 2024, we're at a low ebb for existing homes. Now, new home construction is a different story. New homes have been selling quite well. They do offer incentives. But you can also get the incentives with existing home sales. We'll get to that in just a minute. Let's look again at the Phoenix market in case you have questions about what's going on here and should prices be dropping. Well, you'd think that for the last year, 2024, it's been a terrible market, so you should see prices drop. But look, This is over the last 24 months. New listings and price per square foot, even in this last year, pretty robust. I mean, it's holding its own. It's not dropping down quite as much as you might think. And active listings price per square foot, again, this actually looks pretty flat over the last 2 years. It's not a gigantic change. It's a little bit higher than it was back in the end of 2019. Now we see under contract listings, and we see average price per square foot and median price going up over the last few months, and particularly during the spring selling season, which is coming upon us here in a couple of weeks. During this time, there's a lot more competition. And competition brings price wars. After that dies down, you'll see it settle and flatten out again. But again, this is a little bit of an upward trend we see over the past few months. Now, one thing you also should keep in mind is when you see these drops here in December, a lot of people take their homes off of the market coming right after Thanksgiving because, Christmas is here. So if they're going to be with family, they're not going to be wanting to sell their house and people traipsing through during Christmas dinner. So under contract, price per square foot up. Also sold listings, price per square foot, average and median, both up. And you see this dip, this is the height here of the spring selling season. Then we see a little bit of a dip after that in the summer, but it's coming back up again. And in 2 weeks, about the middle of January, if you're looking for a home, that's the time to get out in the marketplace and take a look right away. If there are some homes that were left over from last year, from let's say they had it listed August to November, but they didn't sell, they took it off the market for the holidays, they put it back on during the spring selling season, they may be willing to work with you. I mentioned before about new home builders being able to give you a deal on rates. You can find new home builders giving as low as 3.99%. With these resale homes, if you're going to make an offer and you need help buying down your rate to get a lower rate, get out of the sevens, that's always something we can negotiate in a contract. We can always ask for it. Worst they can say is no, but at least you have an opportunity maybe to get a motivated seller to help you buy their home for less than you anticipated. So to wrap this all up, there's a couple things I want to point out. Number one, interest rates, according to Fannie Mae and several other, Redfin, Zillow, all of them have been saying that interest rates will stay above 6, maybe 6.5, but there'll be fluctuation throughout the year. You might be able to catch a dip and hit it at 5.99, maybe not. But if it does drop, if you get interest rates below 6%, what's going to happen? A lot more people are going to be in the marketplace, and then you've got competition. If you've been waiting to buy a home for a couple years now and just couldn't find a way to do it, there are ways to get this done. As I mentioned, asking sellers for concessions to help buy down your rate, going to a new home builder and looking at the rates they have. Now, if you go to a new home builder, one thing to keep in mind, always take an agent with you the first time. Whether it's me or somebody else, take an agent with you. If you go to a new home builder without an agent and you register with them, at that point, they could legally just deny paying for your agent to represent you. You're in the hands of the salesperson who works for the home builder. Or you have to pay out of pocket for an agent to represent you to make sure you're getting everything done the way it should be done. The house is being built the right way. We can guide you step by step through that. We have inspectors that can come out, and we coordinate with the new home builders to let them know this is what we want to have done in the home. So even though interest rates may stay a little higher than we want, there are ways around that, and you just need some professional help. So find an agent of your choice to help navigate 2025 and make it a really happy new year for you and your family. If you found this information helpful, please like and subscribe, tell your friends, pass it on, post it on Facebook, whatever. I really like to see it posted on Facebook every now and then by people that I've never met. I mean, sort of get jazzed by that. So I appreciate it. And again, stay tuned over the next few days. We're going to be putting out a little bit more information about different ways to buy homes or land in Arizona. You ever want to own a ranch? Maybe you can.